right, talking about NextEra, NEE on New York Stock Exchange. This is the biggest utility in North America, probably the biggest in the world. I'm not sure about that, but it's definitely the biggest in North America. 130 million market cap, rock solid name. I love the actual name of the company, NextEra, as in renewable energies, what they're rolling out in terms of utility. They will have some older type technologies, but really trying to move towards clean energy. So solar, wind, hydro, those sorts of plays. Really a quality company that can fit in anybody's portfolio. Good block and tackle name. Rock solid in that regard. I think we'll jump to the stock chart because it's quite interesting chart. Let's go take a look. There it is. This is a 5-year chart, so I hope you can see that okay in this visual, but basically it's been marching forward. Had a little bit of a swoop up just before the COVID problem, and then came down in COVID quite a bit actually, and a lot of utilities actually had come down during that COVID pullback period, and I found that a little curious because you would think there might be a small pullback, but it was actually a pretty large pullback for utilities, and they haven't even acted that well after. You would think they would be, steady income, but I guess there was some talk about allowing people to not pay their utilities if they couldn't afford it. That seems to be off the table. I haven't heard any talk of that recently. But as I said, these have not been great traders, although this one looks pretty good on the bounce back. But still, overall utilities haven't been that great, and even this one, it's been fits and starts for sure. It's actually up 3% today on a down day. I do think the utilities are starting to come back for people. I'm not sure why they were so poorly traded, frankly, but I know we were in a very, very unusual period for trading, and often, utilities kind of boring. Maybe it was just used as a source of cash for other ideas, as the market was just going crazy in both directions, really. That's potential explanation, but frankly, nothing's really changed. This is just a rock solid name. Okay, so there you see it in our model. Low return on capital, but that is a utility. That's what they do. I like that this is a very consistent capital growth on the bottom here, above their plowback rate, 10, 12%, pretty much year in, year out, a little bit of fluctuation, but that's okay. Our default says it's fairly valued, but I really think we can put in a bit higher growth rate here, more like a 10%. Remember, our default is quite conservative. So when I put in just a 10% growth rate, earning just 5.5%. Now remember, their cost of capital is very low for utility, so they are. That would be a positive spread over their invested capital, and just that little bit of growth is just enough to make it worthwhile. And you can see this. I mean, the stock chart's been outstanding, right? Like I said, 5-year chart we showed before was outstanding. The long-term charts, even better. Just a small little pullback. Well, yeah, it actually was a big pullback in the COVID period there. It felt like a big pullback. If you took a longer term perspective, it's actually not that big a pullback. But I'm not sure you're going to get much better opportunity, because I think this is the kind of stock that just marches forward. It pays its dividend almost 2%, and just grinds higher. And that's the nature of the business. The market gets it. It's the nature of the stock, and that's the way it will be. I do want to bring up the dividend chart. The one on the bottom is the one to focus on. The green is the cash flow. So it's not perfectly consistent, but pretty consistent cash flow. Then versus the dividend they're actually paying out. So 40% payout ratio. A lot of utilities actually go higher than that. So that's why we have pretty low yield, only 1.93, almost 2%. I would mind seeing them raise that a little bit, but if they're going to grow at 10%, I can see why you keep your dividend low. There's no point in paying out on one hand and then raising money on the other hand. It makes no sense. Companies do it all the time, but at any rate, okay. I think we've covered off NextEra. This is block and tackle, good for any portfolio. Any minor pullback you can get in this one is definitely an entry point. And even without a pullback, you know, just put a little bit of cash in this thing. It's rock solid, little dividend. All right, NextEra. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.